So let's speak with the management of Dixon Technologies. We have with us Saurabh Gupta, the CFO, joining in. Saurabh, hi, good morning. It's been an excellent quarter for you, on all counts. But do you see this kind of growth continuing in FY22 as well? Or could we expect a higher growth PLI scheme? What is your revenue guidance then for FY22?
So as of now, it looks difficult to give a guidance for FY22. We just have to wait and watch. And we are cautiously hopeful that by May end, one should start to see that some of the states, some of the districts start to function, and there can be an uptick in demand like the way it has happened last year. So we are cautiously hopeful. As of now, it will not be prudent for me to give any guidance till the demand normalizes and the markets open. But overall, I think so. We have a very strong order book across all the categories that we have been operating, and that's kind of reflected in our results. And we are just waiting for the demand to normalize. Some of the segments that we operate, lighting, TV, I think so the demand will come back faster, and then maybe in other verticals. But overall, yes, we are getting into other categories as well. We are now getting into refrigerators. We have now got orders.
Right. I lost your line there, Saurabh. But, just getting back, Saurabh, the big problem, as was the case with many other companies, for you as well, was the raw material price inflation. And I can see in your earnings that margins were a bit of a miss purely because of, raw material inflation kicking in. How is it that you plan to balance this out in order to protect your margins going forward?
Right. Our gross margins and EBITDA margins have contracted. There are twofold reasons for that. One is, of course, a change in segment mix with a higher share of business coming from LED TVs. Almost 56% of our revenues are contributed by LED TVs, which is an OEM business model and has a low margin. And the second reason is, of course, the higher input prices, which we have continuously seen happening since November 2020, and the major impact happened in Q4, which has kind of impacted our margins. So basically, we are trying to address the same, especially in our ODM business, through calibrated price increases, value engineering, inventory planning. But as you understand, in our ODM business, where basically it's lighting and washing machine business, there is always a lag in passing on the impact. So in a short term, you'll always have some negative impact till the time you have fully passed on to the principals. So I would say in lighting, we have been able to pass on that to our principals in the last quarter itself, in Q4. Which has been passed on in Q1.
Sure. Okay, what's the current order book status, the kind of impact you've seen on the back of the second wave and the lockdown, the outlook going forward now when it comes to demand and the order book?
As mentioned, I think so we have to wait and watch once the lockdowns open up and the markets open, then only we will see like lighting and TV doing the segment with a slightly higher in value wise. But we continuously, our core is electronics. We continuously find other product categories like IT hardware products, telecom and network.
All right, I think we've got a slightly choppy line as well, but gives us a sense of the outlook, with regards to, manufacturing and order book going forward. That's Dixon Tech.